Hey, folks. Welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, December 4th, 2009. Well, folks, what a wild day on Wall Street across the board. Just a crazy day here as you're seeing the markets, after gapping higher and pushing up strong into the 10 o'clock time frame, reversing again. And if you take a look at yesterday's chart, it almost looked identical to start the day. And what I mean by that is take a look. Up one bar, 2 bars. Today, up one bar, up 2 bars. Look at how you had the reversal yesterday and then the reversal today. The only difference with today, the reversal was quite a bit larger. But the difference again, or the thing that's the same that I find fascinating is look at this. Yesterday was a small gap up and a push, and then the reversal takes you to gap fill, essentially flat on the market. What happens today? Strong push up on a bigger gap. The reversal takes you all the way back down to gap fill even on the market, and then the reversal and bounce here, just kind of like yesterday. So see, it's almost like a micro scale yesterday that it happened as opposed to a macro today. Fascinating stuff on this market, guys. The market reversing in huge manner. Now, we're going to cover, there's a lot of things to cover today in this intraday video, but number one, you have to look at the jobs report. The jobs report coming out, only 11,000 jobs lost all of last month. Now, again, do you believe it? Do you not believe it? You know, we joked about in the chat room yesterday how we expected that after the sell-off yesterday, the Obama administration and everyone over there is going to be taking the eraser and the white out and whiting out the actual jobs number, replacing it with something better because they know they needed to get the market up today. But the bottom line is, and if there's one thing I've talked to you guys about day in, day out, it has no matter about the jobs number. It doesn't matter about the news in any respect. What I mean by that is it's all about the dollar. And today's a perfect example again. The dollar squeezing higher today. And that's exactly what you saw. So again, off that jobs number, the dollar did gap up. But no sooner had the market pushed up initially on a little weakness in the dollar, then the markets reversed huge as the dollar caught a huge squeeze. And we talked about this in the Nightly Research Center video about the possibility of a dollar squeeze, and that's exactly what you're getting today. So a big squeeze, and the market's pushing really to the downside in an unbelievable fashion here off of this. And you can again see there's some interesting chart technical points I want to point out to you. Number one, look at this lower pivot right here. Take this low, extend it right here through the lows, and you broke it yesterday afternoon. You had a big sell-off. Today, you gapped above that level, and you pushed up. Now, where did you go? Well, this is what I want to show you. Take this high pivot right from that same day. So we're taking the low from that pivot that gave us the low area right here. Take the high pivot from that same day on the 2nd of December, connect it to this high, and what do you get as the high of the market today? By the way, folks, guess where we shorted in the chat room? Right up here. Beautiful short. Now, it just so happens that it was at the Iron Curtain. And again, I'm going to utilize that term, Iron Curtain. We've used the Great Wall of China to describe another portion, but there happened to be an Iron Curtain period or area of major, massive, master-level resistance right up there, which also told us to go short at that range right there, okay? So there were multiple little facets right there you can talk about, and that can dictate exactly why you would take that short. And look at the fall that you got on this market. So this market collapsing all the way down to the Great Wall of China upper level. Also happens to be gap fill, also happens to be the flat point of the day. I mean, there's so many levels here that we're telling that the market was going to bounce. But sure enough, look at that reversal and look at the massive fall. From this point up here to the lows, you're talking about basically a $2 plus drop on the SPY in about an hour of time. I mean, that's huge, guys. Any way you cut it, that is an unbelievable whipping of this market. Now, the market caught a nice little bounce here starting at 12 o'clock. And again, I would dare say, why do you think it caught a bounce there? On a technical basis, you would say gap fill is an obvious level. We talked about that in the chat room. In addition, you can also talk about Great Wall of China. So right there, you got a little bit. So basically, guys, just to refresh here, from this level up here, you went from the Iron Curtain to the Great Wall of China in literally an hour. That's huge. But in any case, folks, again, you got a bounce here based off multiple technical indicators. There is another reason why you got a little bit of a bounce here, and that would be the fact that Obama came on TV. So Obama comes on TV. We all know what happens when generally Obama does come on TV. The PPT, plunge protection teams that work there, they're not going to let the markets really collapse when he's speaking, or at least that's the theory we'd like to throw out there for fun. And oftentimes you'll get that kind of sense that the market's going to bounce, especially after a drop like that. There's no way it's going to. You add that into the technical levels points there, you're going to have the market getting a bounce there. So a very easy long position right there as well, all the way upwards to the 200 moving average all the way up here. But again, very easy to trade this market today. The last 2 days have been fantastic trading days in the intraday stock chat. Tons of trades, tons of profits all around. And even on the swing trade basis, folks, guess what? We've been accumulating gold on the short side by utilizing DZZ, 2 times short ETF. This is what the Research Center guys were involved in as well as the chat room. And again, take a look at this DZZ today. What a move from the close yesterday, and look at that move up. Where did we sell? Right up here, guys. Right up in this range. Beautiful little sell. It also happened to coincide with the GLD filling a gap, but gold is getting smoked today. Gold dropping by close to $50 at the lows today in one day. And we had talked about this. I talked about this to the Research Center guys in depth in the nightly videos. And again, you guys can all join that. You want to be privy to it because I'll give you my swing trades. I give you my swing trades. We have the Pro Trader watch list. We have the hot charts and alerts. We have all those means by getting information to you on trades or possibility of trades or ideas of trades and guidance of where the market's going to head. And again, you can utilize that to really become proficient in making profits, and that's what we've been doing, folks. So again, a great little situation here, absolutely fantastic. I did take some profits off the DZZ today. The stuff I bought at 11.68, I removed at 12.32 today. Beautiful little trade right there for a good 60+ cent profit. And again, I'm going to hold a little more short on gold just in case it continues to come down. But that was essentially what I was looking for. I talked about it to the chat room and the Research Center in depth in the nightly video, guys, which is again part of the Research Center subscription. You get everything listed under that Research Center. You got to understand that. All right. Discussed in depth how you were going to possibly see a short squeeze in the dollar, in which case you didn't want to short the dollar intraday. That's exactly what we got today. Nailed that. We also talked about a major fall in gold coming, a recorrection little pullback. That's exactly what we're getting today, folks, as well. Oil as well is trading basically to the downside, but not that much. Now, you might say, well, with the dollar up, why isn't oil trading lower? Well, simply put, guys, the jobs number tells us that the at least possibility of a recovery is very real. Whether or not it's true, the true number, who knows? But if you do believe that number, it tells you the recovery is near, in which case you're going to have demand increasing for oil, so that's going to prop up oil alone. So you don't see oil falling like gold. Gold is more direct on the dollar, while you have oil not so much on that, okay? So that's really what you're seeing here. Let's go back to the spiders. Again, just talk a little bit about the intraday moves on this market, and we'll discuss exactly what you need to know about it if we can get the chart to come up here. And again, just a couple other odds and ends here that you need to really be privy to. And again, we'll just discuss those in 1 second here. But nonetheless, before the chart comes up here, as it's taking a little time, as we're getting a little bit of fluctuation in the markets, what I just want you guys to realize very clearly is to understand where this market could be headed. You had the Iron Curtain hit today, and that's a perfect little level. And then off of that level, you have to watch to see exactly where this market could be going afterwards. And again, we're just waiting for that chart to come up here quickly here. And there it is. Chart did come up there. So again, what you can see here, folks, just talking a little bit more about this, you have the top put in right here. Why? Well, because you have the Iron Curtain. Iron Curtain resistance level, master resistance level right there. And just knowing these levels, folks, I gave these levels to the Research Center subscribers literally weeks ago to watch to this level. Where does it go? Right to that level. What happens? Market tanks. Technicals, folks. In the money stocks, methodology, technicals. It kills the market. You'll make money. It's just the bottom line. All right? As long as you do exactly what we do, we don't really see how you can't, to be honest. So, again, take in mind that. Just always consider that. And you can always join the Research Center to test us out. Chat room is always available. Webinar is a week from Saturday. You want to be involved in that as well. The methodology that we're going to reveal to you will make you a better trader the next trading day after that. All right, folks. So, again, keep in mind what you're actually doing right now. You have a slight inside bar here. This is slightly bearish pattern. However, you can see it probably on the better on the 60-minute. Yep, starting to make an inside bar after this. Look at the size of these down red candles. Talk about ugly, guys. Oof. But in any case, you're starting to make a little bit of a bearish pattern. It may not play out till tomorrow, Monday. But again, you want to watch to see how this comes out. Do we change the pattern by the close? Because you could easily dip back down and then start to make a bull flag off of this as well. So you have to understand how that utilizes. And again, that's methodology that we teach in the webinar, the Research Center, and the chat room, so you can be aware of these type of things. And again, we would like to see you and join up so you can start making this. There's no reason why you don't want to be involved in the calling of tops like we can call here. Again, the Great Wall of China was a beautiful one, and now you got to the next one, and look at what happens to the market. Unbelievable reversal, folks. Notice again where we went, right to the lower Great Wall of China, the upper Great Wall of China there happened to be gap fill as well, and that's where we sit. All right, we'll talk to you soon, guys. Have a wonderful, wonderful weekend. We'll talk to you on Monday. Take care.